if you talk to the large issuers, they'll tell you they've only turned on, you call it 10, 15% of their distribution. And a large piece of the distribution that's been missing is the large, what we call wirehouses, which means the large banks and their massive wealth management arms, whether that's Morgan Stanley, whether it's JP Morgan, whether it's Wells Fargo, Citi. None of these guys have turned on the Bitcoin ETFs for their clients yet.
Today's episode is brought to you by Akash Network, the world's premier decentralized compute marketplace. Check out Akash to buy and sell computing resources securely and efficiently. Purpose-built for public utility at akash.network. Welcome, everybody, into another episode of Coinage as we're seeing the market bounce back after what was an insane start to the week with one of the worst sell-offs we've seen in a while for Japan, the worst sell-off since 1987. So welcome to see some green on the charts, and welcome to have back with us today Pantera Capital's Cosmo Jiang on the show. Cosmo, thanks so much for coming back on, man.
Hey, Zach. Good to chat again. Thanks for having me.
Always good to chat with you because you kind of sit at the forefront of everything that's going on in the crypto world, and certainly a lot of people right now are kind of wondering what to make of the sell-off we saw. It's not often. It's been a while, back to 2021, that we've seen ETH sell off more than 20% in a day. But that's what we had yesterday. So what do you kind of make of everything you saw play out, the carnage, the blood in the streets, to be back here today on Tuesday? Kind of okay, I guess.
Yeah, I mean, look, let's rewind a bit, I guess. As I think about where we are, the sell-off in broader markets really started before this weekend, right? We've seen over the course of the earnings season, second quarter earnings season, which happened over the last few weeks, you really started to see weakness in the equity markets. This was reflected in most of the large cap tech companies, even though they put up strong results, sort of guiding down and talking about AI related capex really starting to ramp up. And they had always been saying that, but at some point, people, to use the term "show me the money," at some point, all the AI spend has to have returns, and the reality is a lot of the AI spend is not generating any revenue right now, and so investors, already a little over their skis, decided to stop rewarding large tech companies over the last few weeks. So it's been pretty sharp sell-off across equities. You started to see the banks and some of the consumer companies start to talk about weakness in the U.S. economy. And so we were already sort of starting to teetering towards weakness in what used to be extremely all flags are green or all lights are green, go U.S. economy. And then the BOJ came out and started raising rates, which totally expected, totally reasonable for them to go to 25 basis points, which is basically still nothing. But the reality is that, and sort of the unknown risk, and you never really know until it comes, is that a lot of people had put on a very levered Japanese yen carry trade. And so with the increase in rates, and especially with weak macro data, weak earnings data, with an exclamation point being the weak jobs data this past Friday, causing a sharp sell-off in rates in the U.S., caused a meaningful reaction in the markets. A lot when Japanese markets opened on Sunday, you started to see huge sell-off and huge liquidations across the Nikkei, and a lot of that was reflected in crypto, because crypto is a area where a lot of people do deploy leverage, where it's a small market actually in the scheme of things, and so a little bit of sell-off has a big impact. And so we started to see pretty meaningful sell-off in crypto across equities, and then things looked really dire as markets opened up on Monday morning. S&P and Nasdaq opened down 4 to 6%, which is a very large move. The VIX, which is a measure of the market's fear, some people view as the market's fear indicator. It's a measure of volatility in the market. Hit 60, and the VIX of 60 hasn't been seen since COVID. It hasn't been seen since the COVID shutdown or 9/11, which is kind of wild when you think about people were as scared, or the market was as scared as it was during COVID or 9/11 for what seemingly is not a big change in rates in Japan. So we saw a massive sell-off across equities, massive sell-off across rates, massive sell-off across crypto. And then unsurprisingly, as all these gauges hit max fear, the crypto fear and greed index is at 17, the RSI, the relative strength index on Bitcoin and ETH had gotten below 30, which is an oversold condition. Things started to bounce. And VIX at 60 never stays there. VIX is now down at 20, which is more normalized levels. And so after what was peak max fear yesterday, things have started to level out again, and that's just how markets go. There's a little bit of a overreaction at first, and then um, overreaction because things already were looking a little bit shaky. Uh, and now things are leveling out. I don't think that's to say we're necessarily in the all clear because things
Yeah.
weren't that great to begin with, but certainly price levels have recovered a little bit.
Well, I think that's kind of the interesting thing, and that kind of jumps into what my next question was going to be. And thank you for the synopsis. I think that's basically everything in a nutshell in what feels a lot longer than just one trading day.
Yeah,
And it was, if of course, crypto is 24/7, so it always is longer than just quote unquote one trading day. But I mean, here we sit now, and it's almost kind of crazy too to think about on the 1 month chart. You're basically back to even in terms of where we started July. And I guess the big question on everyone's mind is whether or not the unwind of that Japanese yen carry trade is essentially over. It's always a hard thing to quantify. Or to a finer point, I guess, how much of that in terms of what it means for crypto is already done now that it's out there and somewhat expected. And I think that that's kind of one of the big things. I know you watch all this because you kind of, you do this for Pantera, kind of how it shook out beyond just Bitcoin, but everything else. The alts got kind of hammered even more so. So kind of just curious to get your take on kind of how you're strategizing, planning for what comes next.
yeah. I think it comes back to a lot of this. Like they're both crypto. Whenever we look at the crypto markets, or as a crypto asset specialist, you need to think about what the crypto specific factors are, as well as where it sits in the broader picture. And so there were both broader picture global macro issues affecting crypto markets, but there were already crypto specific issues seeping in over the last few weeks. Um, that reflects some of that weakness and why we're back to prior levels. Clearly, there was a little bit of run up into the Trump convention, into the Trump, sorry, conference or Trump speech at Bitcoin Nashville, which was extremely bullish, but certainly there were expectations ahead of that. There's a little bit of run up or build up into the ETH ETF, which ended up being, it launched and the event happened, and in classic crypto fashion, there was a sell and use event, and then certainly, crypto, especially the longer tail token or altcoin market, had been seeing weakness for this whole year, and so and then sort of the one catalyst that a lot of people are excited about, which is a potential Trump win, meaning potentially a more pro crypto regulatory environment, sort of the probability of that coming down, right? As new polls have come out over the last couple of weeks, reflecting the Harris candidacy, and so there are lots of actually, in addition to the global macro looking a little softer, there are actually very crypto specific reasons why crypto needed to sell off or maybe had a cooling off or consolidation period. As we look forward, though, I you know I we the way that we manage the portfolio at Pantera and the way that is really to maximize our long-term compounded returns at scale. And so, in order to do that, you really have to understand, where the puck is going, or have a view of where the puck is going over the next 12 months, 12 plus months. So over the longer term, and on that basis, man, things look really good, right? We had this massive washout of leverage that happened over the last weekend. Whether that happened rationally or not doesn't really matter. It did happen. So positioning is a lot safer, or a lot cooler. We certainly have the benefit of incremental flows from the ETFs coming in, whether it's Bitcoin and ETH. And then you have, I do think, regardless of who wins the election and in November, the tide has turned and sort of the Overton window has moved to being much more pro crypto across both sides of the aisle. And so you have all these tailwinds really for the crypto industry, and you have positioning that's now totally washed out. And so it feels like pretty good time to be certainly deployed and potentially deploying more into the crypto markets.
Yeah, I think a lot of people may have gotten caught flat-footed in terms of being fully deployed. I don't want to say
Sure.
myself included necessarily here, Cosmo, but well, let's just say some people were. And when you think about, I guess, what comes next, you kind of made mention to a couple different catalysts that had gotten us higher, and especially things felt good coming out of Bitcoin Nashville. And I was just kind of reflecting on this now in terms of the market cap and kind of everything that's happened where we're at, it's not perhaps in times of panic unlikely that a lot of people were reflecting to the first domino to fall. I was, at least. Maybe since, we covered Terra's collapse here at Coinage. But the idea of going back all the way to 2022 and what the market cap was, it's kind of crazy to step back and think about after everything, Terra, FTX, BlockFi, 2 years of unwinds just in the crypto scene itself, to now be at a market cap, again, today, reclaiming $2 trillion. So I guess it sounds like when you're stepping back and thinking about all that, and of course there are macro factors to consider here, but when you step back and think about kind of what's to come in the back half of the months remaining here in 2024, paint the picture for me in terms of the resiliency of this market.
Yeah. Look, I think the reality is that we are extremely early innings for the crypto cycle. I think you really have to separate Bitcoin and everything else when you look at crypto. Like Bitcoin has a very clear, defined thesis that's sort of idiosyncratic from the rest of crypto, which is Bitcoin is digital gold, right? And a lot of people view that, they believe that, and so that's the thesis. And the Bitcoin's future is really dependent on them achieving increased penetration of the population globally, increased adoption by governments, and that's sort of independent of whether blockchain tech works at all. And so that's why I think like you really have to separate the market of Bitcoin versus everything else. And Bitcoin, because of the pretty strong flows we've seen this year, is probably closer to mid innings than early innings. But everything else is extremely early innings. As you mentioned, crypto market cap is only now back below 2 trillion. But actually, if you exclude Bitcoin, crypto market cap is probably like very similar to where we were when FTX collapsed. So it's basically unmoved or unchanged. A lot of tokens are negative on the year. Or sorry, not a lot. Most tokens are negative on the year. And so it's very clear that sentiment positioning is extremely low. That generally tends to mean it's a good time to be deploying capital in these long tail tokens if you do believe that this technology will work and gain adoption, and there will be more, and that there will be new innovation that users use and like. Which we do, right? I strongly believe that we're still on the path of going from tens of millions of users to billions of users over time. And the goal is to invest in these smaller cap tokens that represent ownership unit or economic units in these protocols that will create value and will drive user adoption going forward. And so I'm very optimistic. We're seeing a lot of green shoots of interesting innovation this year that people sometimes forget to talk about. Right, like we've seen user activity on Solana and Ton blockchains in particular just really explode throughout this year and continue to grow month over month, every single month of this year on both those chains. We've seen the rise of whether you call it sustainable or not, like meme coin trading has really grown, and that's so far it's sort of like $1 billion industry, I'd say, if you think about meme coins in terms of gambling, gambling revenue. Users are losing approximately or spending approximately $1 billion annualized on meme coin trading today. That's like, a small fraction of the few $100 billion global gaming industry. And so we're small penetration, but can grow a lot, especially if this is the future of gambling. And then you're seeing the explosion of a lot of really interesting DePIN projects or decentralized physical infrastructure networks, whether that's GeoNet, HiveMapper, Akash, which I know you and I are both big fans of. And so there are actually green shoots of real innovation that could lead us to a very strong market for longer tail tokens over the next few years.
Yes, I should note that we were fans of Akash in terms of what they're trying to build and what they've shown in terms of some of this use case before their logo appeared down here in the corner for us as one of the sponsors of Coinage. But I also want to point out, too, I was looking, you still have this pinned on your Twitter, and I do think that this is a very interesting chart, just kind of, again, getting to the heart of, hey, where are we in this cycle? And I think I asked you this last time. And the idea of course, we just showed the chart of Bitcoin dominance now, I think, at like a 3-year high at 57% of the total crypto market. As you said, a lot of everything else is in the red this year. But the big unbox here in phase 2 of this cycle, this is back in January, so it's a little bit question mark, could extend to now where we are. But I feel like a lot of people in our community, a lot of people probably watching this, would not go along with you if you're going to say, look, altcoins might come back because they've been beaten down so bad this year. I mean, what's the sell there outside of the use cases themselves? What about kind of some of the capital rotation? And we're going to get into this in a second, because I think a lot of the excitement, at least in terms of fund flows, are focused now that the ETFs have been approved it's like pouring gasoline on what has already been a shift back to Bitcoin and Ether. So I guess what's the finer point that you'd put on there?
Yeah. Well, let me do you one better and say that we have updated this chart.
Okay.
I guess we haven't tweeted it out, but it's certainly in our in our latest blockchain letter published mid last month, and obviously something that I share and talk about closely with our investors, and so we decided to share it more broadly. But yeah, Bitcoin dominance has continued to go up. If we look at prior cycles, the reality is Bitcoin dominance usually does go up, call it 15 to 20 points from the beginning to the mid part of a cycle. And when we published that chart, I sort of thought this time is different for the four most dangerous words, and for an investor, this time is different. Um, although the eight most dangerous words are this time is different, this time is not different, this time is different. But uh, so I thought Bitcoin dominance would sort of cap out earlier this year. It has not been the case, as you said. The incremental flows coming from retail coming from investors investing in the Bitcoin ETFs has been very large and driven Bitcoin dominance higher. In addition to the relatively tepid price action across the rest of the tokens. But every cycle, you sort of see 15 and 20 points of Bitcoin dominance expansion. Right now, we're at 19 points ish of Bitcoin dominance expansion. So maybe it's not so crazy relative to other cycles. Um, and I do think we're at a point where uh, we are closer, certainly, to longer tail tokens taking off and really outperforming. But again, this all hinges on the fundamentals of these protocols. The reason I believe that it's not just based on voodoo technical math or technical chart reading, it's the fact that if we do believe that these protocols are going from tens of millions of users to billions of users over time, those tokens will be worth more over time and almost definitionally worth way more than Bitcoin, which has already grown penetration by quite a lot. Uh, and so, I'm hopeful that these green shoots on the altcoins will start to bear fruit in the form of better fundamentals, which should translate to price action. We just have to be patient and wait to see that play out.
Yeah, I would be remiss if I didn't give a shout out to the latest newsletter, which we were hoping we might squeeze into with our interview with Hester Peirce. I don't know if we did, but I did see this chart just now, and it is worth kind of pointing out some of those token returns for some of the top 400 tokens in the first half of 2024. I don't know, though. I was looking at the chart. I don't know if the other one at the top of it was updated necessarily, but this is a good chart. And maybe to spin it on its head, we can talk about some of what's to come when it comes to Bitcoin and Ethereum, because you and I, before we started this live stream, we're chatting about the ETFs and the huge unlock that kind of went under the radar in terms of the huge wirehouses now basically getting the green light to go solicit for these things, which, there's trillions of dollars at play here now when we think about getting that green light, and supposedly rumors swirling that perhaps tomorrow could be when we start seeing that green light take effect. So, I mean, when you think about that impact, what are you expecting to see?
Yeah, I mean, uh, I think this has totally gone unnoticed by the market. Just to repeat what you said, because I think it's so important. Uh, the Bitcoin ETFs have drawn in quite a lot of flows year to date, but that's been done when, if you talk to the large issuers, they'll tell you they've only turned on, you call it 10, 15% of their distribution. And so, and a large piece of the distribution that's been missing is the large, what we call wirehouses, which means the large banks, and their massive wealth management arms, whether that's Morgan Stanley, whether it's J.P. Morgan, whether it's Wells Fargo, Citi. None of these guys have turned on the Bitcoin ETFs for their clients yet. That is where a lot of the capital exists. Uh, and look, MS just came out. I mean, these are sort of the rumors coming out of the MS private bankers. If you have your MS private banker, who probably have told you already, actually, that they're going to plan to list the Bitcoin ETFs on tomorrow, Wednesday, for which would finally unlock that or give access to that to their massive client base. So I think this unlocking, this getting from 10 to 15 points of distribution to 100 points of distribution eventually, MS and GS and all these wirehouses is a huge piece of that. And so them turning it on tomorrow, I think, is a massive deal.
Yeah, and it's one that we'll be watching, and I don't want to say I drink the Kool Aid or the conspiracy theories around here, but interesting to think about this collapse coming right before that all happens. Perhaps a better entry point for a lot of those private wealth clients. But interesting to see all that, and of course it's going to be huge. Outside of all those things, Cosmo, as always, I almost feel like it would be a mistake to invite you on here and say, hey, here's what we should talk about because I think it's interesting. More important, I think, for our viewers is just to say, hey, Cosmo, free reign on kind of what you're watching because you're smarter than I am. And so
Oh,
when you dig into other things that you kind of like paying attention to, I'm curious what else catches your eye. I know, like, kind of, we've talked a little bit about Bitcoin and Ether versus everything else. What are you excited about right now?
Uh, yeah, I mean, I always go back to I am most excited about applications that are driving consumer adoption and usage. So, what we're seeing on the 10 blockchain is pretty phenomenal. These games, whether it's, you may poo-poo these games, but stuff like Notcoin or Hamster Combat getting to, tens of millions of daily active users in just a few months, just like that is already 10 times larger than what the largest crypto game in the last cycle, Axie Infinity, ever got to. So, this cycle
But
we've
is
gotten to
that is
games.
that not unexpected though? I mean, like, when you consider how much simpler it is than the other game, like, I mean, it makes sense.
Is it because it's simpler, has more users? I don't know if that's true. A lot of people would argue, simpler games are less fun, and so they would have less users. Uh, and so,
Fair, too fair. But then you add in kind of the existing Telegram network, and then maybe you say,
yeah,
okay, that would also be
and
juice.
that is exactly right. You can't hold every single thing equal, Zach. Well, that's exactly right. That I think it's incredible what Telegram has done with its distribution partnership with Ton and the amazing consumer usage that we're seeing. And so, on the grand scheme of is crypto making an impact? Is crypto actually being used in everyday lives? We've reached 10 times the adoption of lifecycle in gaming. Uh, and then, elsewhere, I'm extremely excited that because of this washout, like the meme coin craze earlier this year, great. Like, best of luck to everyone who trades meme coins and wants to do that. That's obviously not our game. We're fundamental investors and we're trying to invest in protocols that create value and return value. And so, on that note, I think it's pretty exciting to see that as this pullback has continued over the last few months, the tokens that have really stood out and outperformed are those with strong fundamental indicators and strong value return stories. And so I think we're getting closer to that promised land of this industry maturing and starting to become more fundamental in nature. Because the reality is that the only way for the crypto market cap that you cited earlier, it's of 2 trillion. The only way for that to get to 5 or 10 trillion over time, only possible ways of the capital that if we get more institutional capital to come in, and that institutional capital will be fundamental in nature. And I
Mm-hmm.
think people are now starting to wake up to the fact that if you actually do want to front run, quote unquote, front run the bags of people in the future, you have to buy fundamental tokens because those are the only buyers going for it. And I'm excited to start to see green shoots of that happening in the market.
Yeah, as we know, Pantera's made a pretty big bet on Ton being one of those. You talked about Solana as well in terms of usage. These are kind of the ones that a lot of people have focused on, and sometimes you don't need to overcomplicate it, I think, is maybe one of the takeaways here. The last thing on your guys' note that did stand out to me was kind of this idea of politics and the idea of kind of regulatory. I think we certainly turned the corner there. So many people were kind of talking about crypto's pump being associated with Trump, and obviously, if he's out there saying we should buy $64 billion worth of Bitcoin in a strategic reserve, maybe that's fair. But now that we move beyond it, I think you got Kamala Harris naming her VP. We just had Congressman Wiley Nickel on the show last week saying that she actually does want to reset with the industry. I don't know what the takeaway is there in terms of maybe both parties becoming more pro crypto. I mean, it is kind of interesting to think about how far we've come in that sense. I mean, is that another kind of catalyst? And do you think maybe some of that is overhyped in terms of if Trump doesn't win, crypto nukes again?
Look, I think going from an environment where the government is actively hostile against an industry to an environment where the government is at least potentially positive and maybe actively positive is very obviously a very good thing. Um, and so I am very excited, and that's why we've written a lot about why it's such a big deal that we are seeing this shift across both sides of the aisle. And as you think about the sustainability of that, it's very obvious that being anti-crypto is being anti-innovation and anti-technology, which is everything that has made the U.S. a superpower to begin with. And so it's very actually un-American to be anti-crypto because you're anti-tech, because you're anti-innovation. I think finally, for whatever reason, we can argue the reasons. Both politicians on both sides of the aisles are recognizing that, and so that's very exciting. It's logical that it should continue because it's only logical that we should be pro-innovation in the U.S. Um, and I think so. I think that's all extremely positive. The question then becomes, how does this impact prices over what time frame? And the political machine moves slowly, and so for us to get to a point where there is uh, comprehensive digital assets regulation that sort of accurately in a modern way regulates crypto, I think will take quite a while. It's not something that'll happen overnight, not something that happened in November, maybe
Mm-hmm.
not even something that happens in 2025. But the unintended or the implicit consequence of a less hostile regulatory environment is that entrepreneurs will feel safe to innovate again. Entrepreneurs will feel safe to build startups and release products again in the U.S. And so that itself can start now. And so that's like in the near term or over the next 6 to 12 months, we can see a lot more innovation coming in crypto. We'll see a lot more entrepreneurs announcing crypto protocols.
Mm-hmm.
And then over the longer term, I think we'll see a much more firm, concrete, positive regulatory framework.
Well, just to bring it full circle, I think that it also, when you're seeing a president talk about buying Bitcoin, or you're maybe hearing that this isn't just criminals anymore, like we heard so much in 2022 and 23, it does a lot to the decisions that are being made right now when it comes to where people want to put their money. And specifically, I guess, just to wrap up on kind of the performance of Ethereum ETFs, since that's the latest one to point to. We talk so much about this, and it's small on my screen, but let me make it a little bit bigger here. We talk so much about it ahead of the launch in terms of expectations. People thinking that we could see maybe 15 to 20% of what the Bitcoin ETFs brought in. The start looks a little shaky in terms of still being net negative, about $460 million on the actual outflows, I think.
Yeah.
I mean, what do you kind of make of the start for Ethereum ETFs? Obviously, the market that it came out in, obviously not friendly. But yesterday, crazy to see inflows.
Yeah.
So I don't know. I don't really know what to make of it at all and where we go from here.
Yeah, I would say first of all, the first 5 to 10 days of action because of the Grayscale ETF really is maybe not indicative of the organic demand for this product. There are clearly a lot of basis traders, arbitrage traders who owned ETH, the Grayscale product, prior to launch, who needed to redeem. They're just closing out their trade, and so the massive outflows that we saw from Grayscale, like arguably, are again not organic and maybe need to be netted out. If you look at the gross inflows, so everything excluding the ETH outflows, it's actually has been in that 20-ish% range of Bitcoin inflows compared to the Bitcoin first 10 days. So it's actually been sort of on the high end of expectations on a gross basis, maybe not so on a net basis because of the Grayscale situation. I think I think it's pretty exciting to see on this pullback the strong ETF dip buyers across Bitcoin and ETH. And so that's very heartening, encouraging, and we'll just have to see how this continues to play out going forward. But yeah, the positive surprise I'd say actually was gross inflows on ETFs have actually been maybe on the high end of expectations, whereas the net inflows, because of Grayscale being much faster and much larger than expected, have sort of marred that or muddied the waters a little bit.
Yeah, perhaps it's an optimistic point to end this one on because we will be watching that. We'll be watching the end result of them now being out there for wealth advisors to potentially also now really start to accelerate what we might see in the coming weeks. But as always, Cosmo, man, can't thank you enough for coming on. Thank you for breaking it all down, explaining it to our viewers, making us here in the Coinage community, as you are one of our biggest friends in the Coinage community. Thank you for coming back on and explaining it to us, man. Thank you again.
Yeah, no, huge fan of Coinage. Thanks, Zach. And yeah, we'll talk again soon.
Right on, Cosmo Jiang there from Pantera Capital. As always, you can catch the biggest headlines in crypto sourced by our community, including Cosmo, and plenty of others at coinage.media. For everybody here, I'm Zach Guzman. Thanks again for tuning in.